But you seem to be arguing that a recession may be in the cards, given that there's this broad central bank consensus that they have to keep hiking rates because inflation is so high. Do you think, and especially with the Fed considering probably 75, maybe 100 basis points, can central banks take the needed steps without severely disrupting not just the global economy, but particularly the developing economies?
It's hard to do. And, so inflation is a real problem. So I'm not saying it's easy, but I do think the central banks have more tools than just the interest rate hikes. So one way for the governments and the central banks to go is to focus more on production. How do you get more things out in the economy? And that makes it it means that you won't have to do as many rate hikes.
How do you make that work, though? You need right now to bring down inflation. You're going to see the economy globally getting hit hard right now. Investing money to make the economy more productive plays out not over weeks, not over months, but over years.
That's true, but investors look ahead. So if you can create the right environment, then there'll be a positive response from markets. You would see, for example, bond yields would go down even as equities went up in price. That would be a stabilization signal from markets. But that takes, I think, more production and the systems that can actually produce more. And I think the central banks themselves can use regulatory policy and also their bond policies better to encourage supply. Central banks have fallen into this idea that they only affect demand, but in reality, the financial systems and the central banks have a massive impact on supply and investment.
You're making a very interesting argument that there's a misallocation of capital. You need to have more capital out in the world for it to go to emerging markets, small businesses, women, et cetera. You seem to be saying that, for example, the Fed shouldn't just let the bonds roll off faster. They should be selling bonds. ECB should be selling bonds. What do you mean by that? And wouldn't that be potentially disruptive to bond markets and then disruptive to the economy?
At first the bond markets will say that, but at some point you have to have more capital outside the bond markets. That actually makes them more creditworthy, and so you might see a situation where the yield curve is higher, but the risk curve is better than it is right now. That would be the goal of having a growth-oriented monetary policy. I think even more powerful is on the fiscal policy side. The governments are borrowing so much that it means there's not enough capital left in the productive sides of the economies around the world.
David, and this is Sherry joining the conversation with Kathleen on really boosting the productivity and not just focusing on reducing consumption. How in line are fiscal authorities as well with monetary policymakers?
Yeah, that's exactly right. So we know that government spending, it's very hard to make it as efficient and effective and well allocated as private sector spending. That's the basis of the market system. And so right now, what we know is that a huge amount of the world's capital is being allocated by governments. And so that can help explain why median incomes haven't been rising. It puts a burden on the bottom, except for the highest income sides of the economy who benefit from bonds. Everyone else really benefits from jobs, from new companies, from startups, from getting their first job. And we need to draw those people into the economy in order to produce more.
David, it's Heidi chiming in from Sydney. I just want to throw up this quick chart showing that the Bloomberg Global Growth Tracker actually fell to 0 for the month. We know that the risk of recession is looming large for the Eurozone, for the UK, for the US. Historically, we would have seen growth out of China coming to the rescue here. How much downside this time is there from the Chinese slowdown, particularly when it comes to emerging nations that typically would have benefited from that Chinese growth engine?
Yeah, this is very interesting. Europe is was facing a problem, and it's clear the reason. They were very dependent on energy from Russia, natural gas, oil, and coal. And so as that is reduced, it creates higher prices, inflation, rate hikes, and that's a complicated mix. And so it's interesting. China in previous global down cycles was a counter-cyclical, meaning they would cut interest rates, they would increase their government spending, and they're doing less of that this time. So they had a actual contraction in the second quarter. The quarter-over-quarter growth was negative, and so and as they go into their party Congress, they have been less eager to really stimulate this time. That may be good for their economy and good for the long run, but it means for the world you've got the #2 economy that's not really jumping forward. That puts more burden on the U.S., but the U.S. is a big, strong economy. It could handle it if it really started producing more.
Another threat, though, to the developing world is, aggressive Fed rate hikes are making King dollar even stronger. That increases the risk of capital outflows. It makes the cost of dollar financing even more expensive at a time when they're highly indebted after borrowing so much to deal with the pandemic. Do you see specific countries that are most at risk now into sliding into financial crisis? And is this a kind of thing that you think could spread? This could become more of a global financial phenomenon?
I'm worried about the weaker countries because the bond market cuts them off. And the investment, people take their money from international reserves, the country's reserves, and move it out. And we've seen a big decline in international reserves. So that's a very real risk. And as the rates rise, it leaves others behind. I think the U.S. has to do what's right for the U.S. So I just think there are more tools that could be used than the rate hikes. And then the countries themselves have to do more to make their currencies, I favor everyone trying to achieve strong and stable currencies. That's what's best for growth. And that could be done better. A lot of countries are intervening, but they're sterilizing the intervention. So in effect, it neutralizes what you're doing and the currency keeps weakening. So that's a challenge. I think that it could be done better on that score.
In the last couple of weeks, we've seen a raft of pledges when it comes to bailouts from both the IMF and China also agreeing to forgive some African loans as well. How much progress are we seeing on debt relief, and should more be done, especially from countries that can do it, like China?
This is important. For some countries, the debt is simply unsustainable. So the quicker that you can move to a restructuring, the sooner the country can get back on its feet. So that should be the goal. Sri Lanka is in that situation, and others. We're working closely with the IMF on Zambia, where China is one of the co-chairs of the creditors committee, and so I'm hoping that there can be progress. But that gets into several steps in order to get to the actual debt restructuring. And the countries need to move quickly, and I hope the creditors will help them do that. Recognize, and I say this with China, that it's in their interest to have a stronger developing world because they're selling a lot of things to that world. So I think they could do better and move more quickly on that. Private sector creditors as well are dragging their feet, and it would be better for everyone to get on with it and get the restructurings going.
David, on the topic of debt relief for Ukraine, does the World Bank need to be playing a more prominent role versus the IMF, given that there doesn't seem to be a clear path towards repaying that debt? Does that funding need to come now from grants rather than loans?
Yeah, so I'm sorry, I lost the Ukraine, right? Ukraine clearly is in a war, a very difficult war. It has a lot of debt. They're looking at steps to reduce that debt, and they're working with the private sector, individual bond issuances. So I think grants are very important. Europe has put money in. The U.S. has put a lot of grant funding in. World Bank has stepped up in their early stages in March and April with large packages. So I think there's more work to be done for Ukraine, and I would like to see an early debt restructuring. That would help people see light at the end of the tunnel.
Well, right next to Ukraine, Europe, and Europe's energy problem, which you say is immense. And you have noted that it spills over. You know, not enough natural gas, not enough electricity, not enough fertilizer, food prices, everything. And you also say that the U.S. is one of the few countries in the world in a position to increase supply of oil, so to increase output, and yet the Biden team is not doing it. Is this a time for global leaders to say, look, we've got green energy objectives, but we've got to put that to the side for one moment and just turn to the world's intense need to get more energy now to help solve these imbalances?
You know, I don't know that you have to say put something aside. What we can recognize is that unless there's more supplies of cleaner energy, for example, natural gas better than some of the alternatives, the world will turn to dirtier sources of energy. That's already happening heavily in Europe with them reopening the coal-fired power plants and buying coal from around the world. So you're getting more production of coal, which not only is carbon intensive, but it's also often got air pollution qualities within it as well. So I think there can be, so I did see United Arab Emirates today saying it could increase its production. That's good. The U.S. is a big producer, so it's able to do that. And I think now is timely. Prices are high, and that energy can be used very importantly by the world to feed people. Canada also is a big potential source of energy and could be doing more in that regard. Natural gas goes straight into fertilizer, which goes straight into crops. So there's got to be in people's minds this connection that if you're going in that direction, you're helping feed people.